Hey guys, so in today's video, I'm going to be teaching you a super simple ICT Forex trading strategy that you can use in order to pass your funded account challenges. Now, this trading strategy is specifically designed for futures trading accounts, and that is because we are only going to be utilizing NAS 100 and US 30, so it's perfect for futures funded accounts. So in this video, I'm going to teach you exactly how you're going to start framing up A+ setups and give you real life examples of trades that I've actually taken in order to pass my own funded account challenges. So let's jump straight into it. We're going to start off by identifying our trading plan and checklist. Now we're going to make sure that we follow this checklist down to a T because it ensures that we are only taking the highest quality setups. So first and foremost, you understand that we're only going to be trading on US 30 and NAS 100 on the 5-minute chart. So our trading begins at 7 a.m. UK time and ends at 10 a.m. UK time. So within this 3-hour window, we are going to be looking for the A+ setups to occur. If they don't occur, we're not going to take a trade. We're not going to trade before and we're not going to trade after. So 3 hours, that's all you have. You sit in front of your screen, you make sure you find an A+ setup, and that is it. If you don't find one, you don't trade. If you do find one, you take a trade, that's it. You're done for the day. We're going to keep this super structured and we're going to follow this plan to make sure that we only take A+ setups. So we identify if structure is bullish or bearish. This tells us in which direction we're looking to trade. If the entire market is bearish, we're only going to be looking for shorts. If the entire market is bullish, we're only going to be looking for buys. We're going to make sure that we identify a 5-minute volume candle leaving a fair value gap. The reason for this is because we're going to use the fair value gap as our entry. As you can see, the next point is take entry on the fair value gap. So we have to identify this volume candle. And last, we're going to target a 1-to-1 or a 1-to-2 risk to reward. So it sounds simple, it sounds easy. Let me show you this trade that actually occurred this morning. It is very, very beautiful. So here we are on US 30 on the 5-minute time frame. Now let me remove all of these drawings and replay the chart to start off at exactly 7 a.m. UK time. So we come to our charts and what do we identify? Well, first and foremost, is the market bullish or is it bearish? This is going to set the precedent for the day, and it's also going to tell us if we're looking for shorts or longs. So if we take a look at the overall direction of the market, we can very safely assume that this is a bearish market. As you can see, price is creating a series of higher highs and higher lows, and we're trending in a downwards direction. That means our bias for the day is short. We're only going to be looking for shorting positions. So once we identify that, we're going to come over to our checklist and we're going to tick off the first box, which is to understand that trading begins at 7 a.m. and ends at 10 a.m. And we've also identified structure to understand that we are bearish. So that's the first two ticked off. So what we're going to do is also draw a nice little vertical line on the chart to show that this is 7 right here and this is 10 right here. So within this 3-hour window is where we're going to be looking for our trade setups. So now that we've understood that, we're going to come back to our checklist, and the next step is to identify a 5-minute volume candle leaving a fair value gap. Well, if we look to the left again, we've got this massive volume candle right here, which has number 1 left a fair value gap, and number 2 is also given us a break of structure right here. So that tells us that this is a key area that price is going to look to retrace back into to give us that lower low and then continue lower from there. So we're anticipating something like this and moving forward. So now that we've understood that, we can also see that there is another fair value gap just below it right there. Now, you might ask me, is this the correct fair value gap to take an entry from? Well, the truth is we don't actually know which fair value gap is going to hold. So what we do is base it off of the other confluences that have been given to us. And as we can see, this fair value gap is what actually caused this break of structure. And not only that, but it also left all of this volume and this fair value gap right here. Now, this fair value gap can be the one that holds. However, it didn't give us that break of structure. So it is a lower probability fair value gap, and I'm much more interested in taking a trade from here. So we've now identified where we're going to be taking our trade from. We come back to our checklist and we tick off that we're going to take the entry on the fair value gap, and we're simply going to target a 1-to-1 or a 1-to-2. So where do we put our stop loss? Well, we put our stop loss just above the most local high, because if this high breaks, then that means price has given us a market structure shift, which means we are no longer going to be bearish and the entire precedent has changed. So we put our stop loss up there. We then target a 1-to-1. So that is it. We've now identified a A+ setup because we followed our checklist from top to bottom. So let's reiterate what's happened. We've marked out our trading window, which is 7 a.m. to 10 a.m. UK time. Within this time zone, we're looking for a volume candle which has left a fair value gap. We've now identified this right here on the left. We've also identified that the overall structure of the market is bearish, which means we are only going to be looking for shorts. We've now identified the fair value gap where we're taking our entry. We put our stops just above the high, and we've now targeted a 1-to-1. Now that the hard work is done, all we're simply going to do is sit back, wait for price to come back up, tap us in as it does right there, and then from there, what does happen? Price literally drops straight to our take profit. So as you can see, if you wanted to target a little bit more, you could have potentially pushed this all the way down to a 1-to-1.5. But I'm happy we've taken a nice 1-to-1, and that is it. Calling it a day. I've now walked away from the charts. I'm done for the day. Within this 3-hour window is the only time I look for a trading setup. If I don't find one, I don't trade. If I find one and I win, that's it. I'm done for the day. If I find one and I lose, again, I'm done for the day. One trade a day, and that's it. Following the checklist, making sure it's an A+ setup. So that was a very nice short position that we've just had explained. So let me give you an example of a long position to show you how that would look. So again, we've come onto our charts. We're going to take our vertical line and then we're going to place it right here at 7 a.m. And the next one we're going to place right here at 10 a.m. So now we've got our trading window, and this is the time that we're going to be looking for a setup. So we come over to our checklist and we tick off the first one, which is to identify our trading window. Next, we move on to identifying structure. Are we bullish or are we bearish? Well, if we zoom out, what can we see? Price is very clearly bullish because it's creating a series of higher highs and higher lows. As we can see, it is very clear that we are in an uptrend. That means we are only going to be looking for longs. So we've identified our structure, we've identified our trading window. And the next step is to identify a 5-minute volume candle leaving a fair value gap. So again, we come onto our charts and we wait for price to give us that. Well, at the moment, we haven't really got anything interesting. However, as we can see right here, we get this massive bullish candle that gives us not only a break of structure right here, however, it also gives us this volume candle which leaves this massive fair value gap. Now again, if I play the next candle, we can see that we've also got a fair value gap right here. And then we've got this bigger one just below it. Now you're again going to be asking me, which one is the fair value gap that I choose? I'm going to tell you again, it doesn't really matter which one you choose because we don't know which one's going to hold. So what do? We add on other confluences which may tell us if this fair value gap is going to hold or not. Now for me, this fair value gap doesn't really give me confidence because it didn't do anything. However, this fair value gap is what gave us the break of structure to the upside and also left all of this volume. So for me, this is the one that I'm going to be paying close attention to. So we come back to our checklist, we tick that off, and then we click on the next one, which is to take our entry on the fair value gap. And then we simply target a 1-to-1 or a 1-to-2. So we're going to be taking our entry right here on this fair value gap. We're going to put our stops just below that low right there. And then we're going to simply target a 1-to-1. So that is the trade right here. And once we've done all of that, we can simply play price on. And you see that we get tapped in. Price does get really close to our stop loss. However, we then pump straight up to our take profit. So it's nice and simple, nice and easy. If we then see how much we could have actually squeezed out of this trade. Again, this went to a nice 1-to-1.8 and also pushed all the way to a nice 1-to-2 risk to reward. So as you can see, you would have been able to take a nice 1-to-2 on this trade. However, if you did want to target a simple 1-to-1, that would have been nice and easy as well. So again, going back to the checklist, what do? We identified our trading window between 7 and 10 a.m. UK time. We then identified the structure. Are we bullish? Are we bearish? We understood that we're bullish. We then identified the 5-minute volume candle, which gave us that fair value gap and also that break of structure. We took our entry on the open of that fair value gap, stops below the low, and we targeted a 1-to-1. Super simple, super easy, and that is all you need in order to pass your funded account challenges, so long as you follow this trading checklist. But that's pretty much going to wrap it up for this video. If you did enjoy it, then don't forget to leave a like, comment, and subscribe. But on that note, I'll catch you guys in the next video.